when your productivity is impacted, you might have a huge production day, and then the next day it's a low production day. Well, guess what? Your emotions are going to go along with that pendulum.
Jumpstart with Jeff.
And where do you think you also bring those emotions? You're going to bring them into your home a lot of times. And oftentimes what we would find is that we give the best of ourselves to our patients, and then we bring the worst of ourselves home to the people that love us the most.
Gosh damn it.
And so we see that routinely. And that's one of the biggest things, that when you don't have that certainty, you're just on this emotional roller coaster ride. And because you don't know what's coming, and you can feel that, like if something does happen, like we talked about, like a nerve gets severed or you lose the opportunity to work with your hands, you don't know what you're going to then look at having to do. Your back is then completely pressed up against the wall. And having some of that certainty and that peace of mind, I will tell you, opens up this emotional bandwidth inside of your brain that allows you to have creativity, that allows you to actually connect and be able to walk through and think through problems, and to see things with clarity, and to then make decisions with certainty. That, again, I'm going to come back to, it allows you to actually show up as a very intentional leader. And leadership is something that is missing so significantly. And the reason I think one of the things that's missing so significantly is leadership walks on this fine line more so toward the line of darkness than it does the light. Because we have to do a lot of things in a leadership role that really do border on that line of darkness.
Yep.
And a lot of what gets confused nowadays is that people call leadership is really management. That's not leadership. Leadership is also, too, one of these identities that as you become a better leader, and I don't think leaders are born, I think that they are created. That's my own personal opinion. But as you become a better leader, that is one of those identities that cannot be stripped from you.
Yeah, it's a line item on the human life value balance sheet.
Perfect.
100%.
Yes.
And we can leverage that in our life. And again, I keep coming back to this, but when we slow the noise, so I want to talk about the noise really quick. You said it's on our phones, it's everywhere, it's social media, it's all this stuff. But some of the biggest noises out there is the government.
Yes.
Regulations.
Yes.
Financial institutions. There's a lot of noise from financial institutions. Do this, do that, do this, don't do that, all this stuff, all the noise. The news media.
Yes.
I think 9/11, or not 9/11, but COVID exposed the news media more. At least for me, it did. It's
yes.
Like there's so much more gray before, but now for me today, there's just so much more black and white with just the propaganda, their agenda,
the narrative.
The government, big financial institutions, the news media, they have an agenda.
Yes, they do.
And so all the more reason for us to become a leader, to slow the noise, to go through your process, to go through my process, to be able to slow that noise and gain that clarity for yourself as an individual, for yourself first, for your spouse, for your family, for your practice. And to have this, utilize your framework that you coach on, utilize AIS in your life of identifying everything on the human life value balance sheet, gaining clarity around number one, investment. And then when you relinquish control of cash, keep it guaranteed, protected, and liquid, and use the systems that we provide to use that back into your life for future money decisions you're going to make anyway. And that's that whole banking concept that you're introducing and talking about earlier.
Join the Limitless 90-day intensive to get 25 plus years of proven real life results, all distilled into an unmatched experience that helps you create limitless power in 12 weeks or less, so you can ultimately take your practice, marriage, and life beyond the next level quickly. Save yourself decades of guesswork and painful mistakes. Apply now at www.limitlessdentistacademy.com.
Well, and Michael, that creates, simply put, that creates sovereignty. You know,
Yep.
when you look at becoming a sovereign individual, when you have these things and these processes put in place, that's one of the things that allows you to experience that. I was just
100%.
thinking that as you were saying that, I was just like, one of the things that we really do want to achieve is being a sovereign individual and having our freedoms. I mean, that's like the whole purpose in life. And to continue to expand and to grow and to have this opportunity to reveal more of who you are. And I mean, if you can do that, I look at that as some of the stepping stones to being successful. And success is defined differently for everyone, meaning that it could be a number for somebody, it could be days work for others, it could be, things revolving around family. My simple definition for success that I've come up with for myself is that really creating and having a life that I love waking up to. It's that simple for me. And when I can do that and have that, then I know that I'm successful. And my success doesn't have to look like anybody else's, and nobody else's has to look like mine. At the end of the day, what we're after is, how do we do this and how do we create this? And so, what I'd love to jump into, Michael, is without a whole lot of maybe buzzwords and everything, just give us an idea of like, what does being your own bank actually mean? Because there's individuals out there who have no idea even what this concept is. Some of you guys out there might have heard it. Some of you guys might be utilizing it, but we're going to dig into some of these things today so you get a better understanding of it, how things can be utilized. I'd love for Michael to talk about, especially the protection piece and the liquid piece, but one thing at a time. Just give us the simple, definition of what does that really mean, being your own bank?
Yeah. Okay, great. And that's why Garrett Gunderson and I wrote the book, What Would the Rockefellers Do? Our first version came out in 2016. Second version came out a year and a half ago. And we now have large mutual life insurance companies like New York Life, Jeff, that just approved that book through compliance.
Sweet. I
For
love
their
it.
agents to use nationwide. So we're not only using it ourselves with clients like yourself, you and Cami, but we're out to change the industry. Because there's a lot of misinformation when it comes to what is this whole banking concept? How does it work? And I put it in the framework of AIS. So number one strategy, when you relinquish control of cash, keep it guaranteed, protected, and liquid. Well, you could put it into a regular savings account and have some certain guarantees and have it protected up to a certain amount and have the liquidity of it. But there's a product called whole life insurance with the large mutual life insurance companies. New York Life, Mass Mutual, Guardian Life, One America, Penn Mutual. These companies have been in existence for over 150 years. They just like a number of years ago went from a paper app to an electronic app. They're just so conservative. But we're buying that conservativeness of their company when we relinquish cash to them in a product. So whole life insurance is a product.
Yes.
Just like a tool in dentistry. It's how you utilize that tool with patients or with clients. And that's how we leverage it. So we leverage whole life insurance as a product because number one, there's an underlying guaranteed rate of return on the cash. So
Perfect.
whole life insurance is not an investment. It's a savings vehicle, right? We
That's
identified
awesome.
investments where you have control, knowledge, experience, and expertise. That's the area to take risk. When you relinquish control of your cash, keep it guaranteed, protected, liquid. So whole life insurance meets that characteristics. Now, to go further and how we go into and what we go into depth on in our book, What Would the Rockefellers Do? We want that whole life insurance to be properly structured and optimally funded. What that means technically is that there's a rider you can attach to these whole life policies that allow you to put extra cash into them over and above the minimum amounts that they require you to put in. And you don't pay commissions on that extra amount that you put in. The IRS regulates how much extra that you can put in. So if we have a client that wants to put away $5,000 a month, maybe only 1,500 of that is the minimum amount. And then the other 3,500 is the extra that they put in.
As the rider.
As the rider, that's exactly right. It's called a paid up additions rider, PUA. And that lowers the commissions by 70% on the policy. Now the policy is producing net return on their cash around 4 to 5% a year, tax free.
That's huge. That's huge.
Individuals in the stock market, Jeff, S&P 500 are hoping to get 8, 9, 10%. They pay a management fee. They pay taxes on it. They're netting
risk.
somewhere around what they're getting in their whole life insurance.
And having all the risk.
And not to mention the risk. That's exactly right. So we take clients like you and Cammie through a process to identify all of this and to get this in place, and then leverage it as a tool for the certainty, and then leverage that certainty in their life, the peace of mind. Because as we build big business in our practice and we have big cash savings being built over here, it protects our courage and confidence to not only give us the peace of mind for ourselves and our spouse, but to continue to build at a really high level in our practice.
It's phenomenal. It's such a phenomenal vehicle.
And it has a death benefit associated with it. Every dentist that I've worked with wants death benefit, whether it's term life insurance or whether it's whole life insurance, a permanent policy, they want death benefit.
Absolutely. Like, I know if something, God forbid, happened to me, I know that Cammie and the kids are set. There's not going to be any issue. And just that peace of mind is so freeing. And just to know that, you have to make a very uncomfortable call, but at the end of the day, my wife and children would be taken care of. And that is, you can't put a price tag on that.
So because we can't put a price on it, that's one of the first things that I identified with you and Cammie. That's the first thing I identify with clients is just death benefit. What's that dollar amount to replace the economic value of that dentist in the family, of that economic force within the family? And then we put that in place. We do a little bit of term insurance. We do some whole life insurance. We have that combination to protect the death benefit. We want to transfer that risk to the insurance company and allow them to manage that risk of death, which frees us up to stay focused in our area of expertise. And that's dentistry. That's our own business or career that we're in, because nothing will outproduce that. So transfer that risk frees us up to not only enjoy life, but produce it at the highest level. Let them manage that risk of death. And then whole life insurance has a cash value, this guaranteed rate of return. So we have cash building in there. And so let's talk about banking.
Well, can you answer back up there? Because you just brought up something real quick that I think is very helpful. Just real briefly, explain cash value like I was a toddler, just because, some people might not have the best opportunity to know, well, what does that mean? Like, what is my cash value in that whole life policy? What does that even mean?
Great. Okay, good. Thank you. So there's term life and there's permanent whole life. Term insurance is like renting a home or renting a piece of equipment versus buying it and building equity in it.
Perfect.
So we can rent it, and we rent it. I own some term insurance, but I also have whole life insurance, and we rent equipment and we buy equipment. It's what strategically works the best. But like when it comes to a piece of real estate, we can rent that home or we can buy it. We can rent a building for our practice, or we can purchase it and build equity in it. So the cash value is equity in a policy. So let's say we have $1 million death benefit on a whole life insurance policy. And each year they're contributing $5,000 a month. That's $60,000 a year. It's building cash value in the policy after the first couple of years. Well, the first 2 years, it's building the $3,500 that I talked about. Mm-hmm. And then the third year on, it's building all $5,000 a month as a savings account. While it has a death benefit, it also has a savings account inside it that's building cash value, which is basically a savings account inside the policy.
Beautiful. And so this will probably get into some of the liquidity aspect of it, but just so the listeners have an opportunity, how do the policy loans actually work then?
Yeah. And there's a lot of misinformation out there, because if you're Googling or YouTubing or, seeing videos online about becoming your own banker, and they're saying you're paying yourself the interest, you're not paying yourself, but you can pay yourself the spread. And there's a big benefit to that. I'll talk about that.
That's an important difference to know.
It is a significant difference. When you take a policy loan utilizing your whole life policy, it's the life insurance company that lends you their money and they put a lien against your cash value. So if you have $500,000 of cash value in your policy, it's kind of like a home equity line of credit against your house. The life insurance company, if you have 500 grand in your policy that's growing, the life insurance company will lend you up to 500 grand and they put a lien against your cash value and use it as collateral. So if you don't pay them back, they're going to take it from your cash value. And if you die, they'll take it from your death benefit and pay off the policy loan. So you have a guaranteed line of credit. Well, right now, Jeff, those interest rates are 5%.
That's a little better than what's out there right now anywhere else, right?
Yeah. Business loans are what? 9, 10, 12,
Huge.
Whatever they are. Leases of equipment, when you do the math on them, many of the leases on equipment are around 19% a year.
It's crazy. Crazy.
So let's put some of this into, when I did go to college, I went to school to become an accountant. So I love numbers. That's why I think I've done so well in the financial services industry. And so I have to be careful not to give too many numbers. In the 1980s, Jeff, banks, so 1980s, when you and I were rocking out to big hair bands in the 1980s.
Yes.
When I had hair, and I used to have a mullet. Banks paid savings account interest rates of 9%.
Wow. Think about that. Holy cow.
So
That's
you drive
wild.
up to the bank in the 1980s and there's a big sign out front that says, bring us all your money. We'll pay you 9%. But if you walked around to the side of the bank, the mortgage department had signs that said, bring us the deed to your property and get a loan for 15%.
Right. Right.
So 9 to 15 is a 6% spread.
It's a huge spread.
But it represented a 66% profit. 15 is 66% more than 9. If you bought if you had to pay maybe a 3D printer, I'm not sure how all that goes on now today, but if you bought something for a patient for $9 and you sold it to them for $15, you made a 66% markup. That's what banks were earning in the 1980s from 9 to 15 was that 6% spread represented a 66% markup for them. So they're pulling everybody's money together, lending it out at 15, paying 9, and they're making 66%. In the 1990s, they lowered interest rates from 9 to 3 on savings accounts. So now they're paying 3%, but the average mortgage rate in the 1990s was 9%.
Yeah, I see where all this is going. This is wild.
So it had the same 6% spread from 3 to 9, but now it represented a 200% profit. Because if you could buy that same 3D printed tooth, they 3D print teeth now, right?
You do. You can 3D print, mill, all. Yes.
Okay. So my limited knowledge, and I do have
That's
some
okay.
of that.
You're doing great, man.
Okay. But if you bought that for $3 and you retailed it to a patient for $9, you made 200% profit.
It's great profit.
So banks were pulling everybody's money together, paying them 3, lending it out at 9, and making 200% in the 1990s. So let's look at what's going on today. Today, interest rates are all over. They have come down recently. The Fed just dropped them another 0.25%. But a mortgage rate is around 6. Mm-hmm. So let me just plug this into my calculator. And savings rates, you can still get around 3% on a savings rate, but 3 to 6 is 100%. So if they're paying 3, they're lending out at 6, they're still making 100%.
Yes.
But not everybody's getting 3%. They have to have larger balances. So maybe they're getting like 0.25. 0.25 to 6% is 2,300% difference.
Yeah, that's what I was figuring. That's where this was all headed to. That's huge.
So when I go through, Jeff, like I went through for you and Cammie, clients are saying, well, how do I become the bank?
Yeah.
it makes sense when the spread is larger than what the insurance company is going to charge you. So if I put in 5% to 6%, that's 1% difference, 5 to 6.
Yes.
It represents a 20% increase. So
Amazing.
if I find docs that are paying 6, 7, 8, 9%, and they've got money in a qualified plan, 401k, and they don't have it in whole life insurance, and we can transition some of that money into a whole life insurance policy, they can become their own bank. They can pay themselves that 20%, that 40%, that 66% with money decisions they're making anyway.
Anyway, exactly. Listen, and I'll share this. Like, I have used this to when we bought one of our boats. I've used this when we actually bought the lot that we built our custom dream home on. I've used this also too, even just as a bridge with legal things, all kinds of different ways to utilize this. And the thing that I love so much about it is like, it is so liquid. And as Michael said, it is protected. I don't have to worry that if I was sued, like, they're not going to be able to get this. So personally, I would rather leave less money in my bank account, enough to cover my bills and my living expenses and that, and maximize a policy because I get access to it. Like last time, Michael, I made a call to you and we had the money within our account by like the next day.
Yeah.
And it wasn't, I didn't have to go through 2 hours of paperwork like you would, or longer, or a week's worth of approval from a bank. It was a phone call. And that's also personal care and personal touch. And there's a lot also that goes along with that is just, that really makes it like a white glove type of service that I know that you provide. And that to me, again, it gives peace of mind. It gives me clarity, and it gives me confidence, and it gives me certainty to make decisions.
Yeah. Beautiful.
So thank you.
Well said. You're welcome. And well said. So there's a whole economic basis around all of this that you and Cammy are enjoying, that all of my clients are enjoying, that I'd love to help any listeners with. Even if they already have policies in place and they don't know how to utilize them, I'm happy to help with that. Wendy and I bought our dream cabin 2 years ago. Mortgage interest rates were around 7.2% on a second home with an 840 credit score and low debt to income ratio, great income. And instead of taking a mortgage on that cabin at 7.2%, we took a policy loan at 5%, $815,000 policy loan, paid cash for it. And we're paying ourselves the difference between that 5 and the 7. And that's a 40% savings for us. 40%. I'm not getting that in the stock market anywhere with a shit ton of risk. I'm doing it with a money decision that I'm making anyway. Yeah. So we have countless examples for that, but I want to touch on this also, Jeff. Whole life insurance gives you a death benefit today that we all want, and it gives you a death benefit tomorrow. Whether you die at age 70, 80, 90, or 100, they actually go out to age 121 now. Wow. It's going to pay a death benefit. So we can add that death benefit as a line item on our financial balance sheet, and we can spend that death benefit while we're alive and leave it behind when we die. Here's one quick example, and there are dozens of examples out there. I'm in my home office. We moved in during COVID, April of 2020, build our dream home, build a home office here, and thank goodness we did. COVID, all that kind of crazy stuff that was going on. But our home's valued around $2.2 million. I'm 54. In 20 years, when I'm 74, which is wild to think about, that's only 20 years away, Wendy and I plan on doing a reverse mortgage. We're going to spend, so $2.2 million today in 20 years will be valued at just over $4 million at a 3% inflation rate.
Right.
We plan on doing a reverse mortgage. It's a mortgage in reverse against the equity of our home. It's tax free to Wendy and I. It's going to be about 160, 180 grand a year that they'll pay us and add to a loan against our home on the equity that's in it. And then when we die, our whole life insurance death benefits will come into our family trust and allow our kids to pay off the reverse mortgage and keep the home if they want to. But that death benefit gave Wendy and I the permission to even think about doing the reverse mortgage, because now we have a way to pay it off when we die.
That is so beautiful. And it's something that is, again, it's not something super complex to set up. It's just knowing the right systems and having somebody like Michael, who is an expert in this, be able to walk through and find out what is important to you. Like, just like that, that's something that's important to you and Wendy.
Yeah.
And there will be an amazing opportunity to leave that to your kids. I think there's so many amazing options out there for dentists. And really, one of the things that I would love for you to look at is, listen, if you're a dentist, Michael, what do you think is like one action this week? If a dentist just decides to take one action in considering something like this, what would that one action be, literally, for them to look at, Michael?
Yeah. I would start with the resources that we offer on our website at Vault, V-A-U-L-T. I'm sure you'll put it in the show notes. It's called Vault AIS. The AIS is for number one asset, number one investment, number one strategy that we talked about. So vaultais.com/books, BOOKS. I told you before we started the show that I'd give all your listeners both the books for free. It is $9.95 for the shipping. You can go on Amazon and buy them for $20 a piece, or you can get them free on our website. Happy to send them to you. You can start with those resources, and in reading those books, and if you order the books, we're going to send you the audios for free also.
That's awesome.
But that action item would be to just start being intentional about where you're at in your life and what you truly want, if it's possible.
That's
where am I? What do I want? And then I invite anyone listening to this to get into a conversation with me. I'll take you through that clarity, Jeff, just like you do with your coaching clients. What I do with my clients is go through that clarity, help take away the noise, limit the noise, narrow it down, and get clear on what they truly want. But I would say the action item would be to order the books, get them, but not just get them to start listening to them or reading them to get you in the mindset of maintaining control versus relinquishing control. And it'll help you see what's possible in your own life and help you slow down that noise, would be my goal for everyone listening.
Man, that's perfectly said. And thank you for the generosity, for offering the listeners the books. They're excellent books, by the way. And Michael, what is the best way I know you gave the website again, please say the website again, but what else is the best way? Any other ways that you want listeners to be able to contact you?
I would say the website. Yeah. Okay, go to the website. We have all sorts of learning material on there. You can contact me personally through the website. I know, Jeff.
And we'll plug this into the show notes, by the way, then too.
Yeah. I think the website would be the number one place. Yep.
Man, Michael, brother, thank you for the wisdom and the scars. Thank you for both and for sharing both today. And guys, I couldn't encourage you, really to get yourself financially in a great place. Take a minute, take the offer, take Michael up on the offer, get the books, study them, be intentional about it, and then set yourself up for success so that you can put yourself in a great place to create clarity, to create certainty. The more that part is in order, the rest of the things in life fall in place a lot easier. Money doesn't solve every problem, but it sure helps quite a few. And having that peace of mind is worth it. Like I said, to me, it's priceless knowing that if something happens to me, my family is taken care of. And then to set things up so that you can actually create legacy. So Michael, thank you very much for being an amazing guest today. Thank you for dropping some incredible knowledge bombs. And until next time, have an amazing day. Peace. Love y'all. Take care.
Thanks for listening to the show. If this podcast episode resonated with you, make sure to reach out and send me a direct message on Instagram at Dr. Jeff Buske. That's dr.jeffbuske. Look forward to chatting with you. Till next time.